Alright, so this is a quick review on the markets today. On the intraday trends, higher chart on the top is like a higher brick size, and the chart on the bottom is a lower brick size. It's just the same concept as a high time frame and a lower time frame. Anyway, so first thing is to really take a look at what happened on the Dow and how it's set up and all of that. So what you had was a downtrend. There was a climax here, which was very evident by the heavy volume. Biggest volume in 38 waves, big red right here. That's what I call climaxes, up and down, big greens and big reds. You can see this big red right here. And then after that, as the thrust was shortening, there's no volume. There's no volume. So what happened was, these are similar to secondary tests, but a lot of times the climax, secondary tests can go below the climaxes. Like climax doesn't need to be the exact low or the exact high. It's just telling you, it's foretelling that, hey, there's going to be a turn. And that's just one possible situation. There's a lot of other things that need to be observed. Anyway, what was a climax? Big red here. After that, shortening of the thrust and no volume. So what does that mean? There's two behaviors that are presenting themselves after the climax are lack of demand, lack of supply, because you see the volume. It goes from whatever 83 to 22 to 15 to 11 to, I don't know, like 11 was the last one, right? And then the next attempt after that was only a 5. After that, demand comes in. So that increases the probability of the trade, because the bulls are bulling the market because there's no supply. If there's no supply, it makes the bulls enthusiastic or emboldens them to go long. And that's what they did. And look at the thrust. Good thrust and good volume. So, I mean, that's all you really need to know, that there's going to be a turn, right? And the other thing is, like, it's at that level, so that's also really important, because you got to know the level, the higher time frame level, because that's where they test. They pull back and all of that. Alright, so after that, did a spring, right? But before we talk about that, I want to also examine certain things. One is, here you had breakout. So these breakouts are very important, because they're taking out 1, 2, and I think the final is 3 minor highs. It's really important that they take out those highs, even if they're small. They should take out highs, because that means demand is overpowering supply at those places. Alright, and you need to see that evidence for a change of trend. Change trend is not easy to do. Alright, other thing to note was right here, this brick. You see the volume on that one brick? That brick has more volume than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bricks in the background. So that's also really important, because you don't you want to see a process of buying, not like a quick move or anything like that. You want to see the change occurring and the process of demand overpowering supply. And a lot of times when you have demand, it can be preliminary demand, right? So anyway, so this, for example, is, I could call it preliminary demand, or the initial change of behavior, or initial sign of strength. I really don't care. But the point is that this was a confirmation after the spring. So this spring is very important, because you have demand in the background. You had an attempt to break the low, and look what happened. So clearly they can't break this level, or it's hard to break the level, because an attempt to do that was defended by the bulls. After that, there was just a matter of pullback to test. And one thing you're going to notice is markets will tend to test, yes, based on volume and all that, but also based on where the other side failed. That is right here in this 7. You see the wick? The wick says that bears tried to go down, but they failed to go down. All right, so they failed to go down, and they were overcome by the bulls. And that's exactly where it tested, because that was the point that got retested, because bears failed there and the bulls are there. That's why. After that, the market goes up, up, up. Here was a little confusing. Right there. And right here, I got a little bit confusing because the thrust was shortening. You see 7, 2, 2. This attempt to go high was pretty good. Like in terms of effort reward, there's effort and not a lot of reward. And then they were selling in the background and a couple of breakouts. So this was a little confusing. And one of the reasons why was also this brick right here. You see the volume is 19. That's bigger than 7, 4, 11, 6, 2, 2, 7, 2, blah, 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 all the way. I mean, it's the biggest brick, like, biggest amount of volume that I'm seeing. So, anyway, so here, the way I view it is, this is not a breakout. Although if it had followed through and held, it would be a breakout. It's actually a climax. So sometimes you get breakouts, but there's a false breakouts. They can be interpreted as climactic volume instead of breakout volume. Breakout indicate continuation. Climax indicate termination. So over here, this attempt to break out was sold into, that's why heavily, by the bears, and then they sell some more, making the breakout fail. And then I'm looking at this, and it goes back to the support level and cracks a little bit, just a little bit. So the chances for the down move are quite high. But somehow, like the bulls weren't done, and they rallied. So what am I looking for here? Possible up thrust, or maybe it's just going, or maybe just, you know, the other time frames and daily and all, it's just way too strong, and you just have to accept that. So that's it. Let's see, 554. Supply is evaporating here from 8 to 5 to 4 to 1, and demand came in 20 and with good thrust, and another 28. Okay, so yeah, I mean, the bullish thesis has overwhelmed the bearish thesis. You see the other market here, the ES, it already made a high. So a nice higher high up. So there you go. Now let's move on to the next market. All right. So basically, demand came in the crude. And let's see how it came in. We'll take a look at the background. Background is going down, right? What's this market? This is pretty. Oh shit. All right. So the market going down, 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 down. Here, you see the thrust is about 2 bricks, but the volume is much heavier. Why? This effort there, a lot of effort. And I guess you could call it a shortening of the thrust or a spring. It doesn't really matter. The point is there's a lot of effort to go down, and instead it goes the other way. So why does it go the other way? You have volume off the bottom, or change of behavior bar, right there where it says the 57. 57 is bigger than 29, 14, 8, 15, 17, 15, all of this area. So this is your volume off the bottom, or change of behavior. And look what happened. So after that, you know, market goes down, comes back to test, some supply comes in, and there's reaccumulation here. Right there. into this area, and all it's doing now, one second, it's here somewhere, yeah, right here, as it's just setting up tests of the highs. All right, why? Because it's hard to break these areas because the positions have been established. Look at this, 74. That's your change of behavior. Not in terms of a wave, but in terms of a bar, or distribution, or whatever you want to call it. It's selling right there. So it's not easy to take out, whoever is doing that and other people jumping on board. So as the market goes there again, look at this, 71. So it's 74 and in the 70s because that area is being sold into. And it's registered in the volume because all that volume made one brick higher. All that volume made one brick higher. So that one brick has more volume than this entire prior up wave. So that is saying that something's not quite right if one brick has more volume than the entire up wave. So I mean, there's a lot of effort there and not a lot of reward because it only went one brick higher. After that, I mean, that's it. It goes down, supply comes in. Only problem is, I hate when this happens, is that it didn't test, high enough. So that's the problem. See what I mean? Like, it didn't go up, so there's a lot of risk here for entry. Because I mean, you have confirmation because you have supply, heavy supply, good thrust, good volume, and what? And good selling. Yeah. There's some supply here. Supply confirmation. And but it just didn't pull back. So maybe it does it here, I don't know, but it seems like it's gone. And if it does go up, it's going to be breaking out against these highs, which can change change the direction because of the breakouts and the buying pressure required to overpower the bears there. Anyway, long story short, there's a lot of effort, up thrust, retest, breakdown, confirmation, and no retest for the entry. So right now it's in downtrend, at least on the lower brick. Alright. Okay. There's a lot of volume here, but it was taken out. Anyway, I don't see any change here. There is some volume here, and there's some price action, over here, but nothing. I don't know, nothing really overwhelmingly constructive. All right, moving to gold. So gold. Can't tell. It's just continuing the uptrend. And over here, the volume picks up. Look at these two wicks. 158 and 159. And look at their wicks. They tried to go down, but they can't. So it's going the other way. And why? Because they're testing this breakout. So these guys are defending. And when it goes there, it tries to go down, bobs up, tries to go down, bobs up. So yeah, I don't know, it's just not breaking. So higher prices expected. And if you look at the higher time frame, this is just take a look at this. You have a breakout, you have a test of the breakout. So you very likely do expect that that's where pressure is going to come in, the buying pressure, and that's where it does. Why they're defending this breakout. So yeah, this I was looking at. Okay, so let's move on to copper. So this downtrend I'm observing now, this is interesting to me because it's going down, and over here it's very climactic. So I think we might be getting ready for a bounce. Let me see. If you could see, you see this, look. See this volume? It goes from 99 to 35 to 26 to 11. Right? And then it bobs down, increasing on 75, and goes the other way, breaking out. So it seems like it's a reversal, counter trend up, and probably, let's see this. This is a very good area to test where sellers will probably defend. So looking for a reversal. Let me see this. There it is. There it is. Right there. Look at that. 80. 80, that's your volume off the bottom, which is causing this change. 80 is bigger than 18, 8, 35, 37, blah, blah, blah. All these bricks. All of these bricks. There it is, right there. That's your demand. There's your demand. Because you need to see that buying to have confidence that you're trading on the right side, right? So it really helps a lot. It's not like some random pattern. There's your change of behavior or volume of the bottom or demand or whatever you want to call it. But there it is, 80 right there. There's the print right there. So I think the chances of going back to test are quite high. And that's all, folks. Thank you. Bye.